What's going on, guys? Hope you're having an absolutely fantastic day. In this video, we're going to be talking about what the hell happened with Alibaba earnings, right? So we can see that the stock opened at $100 and ended the day at $94, right? Down almost 6%, right? If you count the pre-market high, it was actually 101, so down about 7%, right? So we're going to be talking about what the hell happened, right? And especially for me, I bought call options about 2 days ago, right? And when they reported earnings and the stock was up 6% pre-market, right? I was actually pretty happy, right? I was like, wow, I'm the best market timer in the world. And then when it ended the day, I was asking myself, wow, why did I buy call options 2 days ago, right? No, but on a serious note, I was pretty happy with the results, and it didn't really bother me that the stock went down. Obviously, I would have loved if the stock went up, but the fact that once they report earnings, the stock was up 6%, I was sure that it was a good earnings, and it didn't bother me too much, right? Something that would have really bothered me was that if at 8:30 I refresh my Alibaba chart and then it's down 20%, right? That would have really bothered me, right? I would have been wondering what's wrong with the company, right? But in this case, maybe it's algorithmic selling. Maybe it needs to touch this 200-day moving average before bouncing. My thesis is still on track, right, basically. So if we take a look at the technicals, RSI is still incredibly weak at this 30 range. If we see a 75 to 80 range again, right, I would think that it would be around $140 to $150. So that's a far way up from here, right? 50-60%, right? So I think the RSI will eventually reach there again, and the price will eventually reach there again. It's just when, right? Or maybe we won't even reach there, right? We'll have to see, right? I'm not a god, right? I cannot predict the futures. But if we look at the technicals, I think I'm still firmly on track. It just touched this 200-day moving average now, right? And it's basically didn't close below it, right? So that's a bit of good news for the technical bulls, right? So if we take a look at the earnings, I've already read through the earnings and I tried to highlight all the important points, right? But apparently yellow highlighter doesn't work on this this PDF document for some reason. So we'll have to go through it bit by bit, right? So revenue was quite disappointing, up only 2% year over year. But I guess since their inflation is about 2 to 3%, it's not that bad, right? So basically it's flat year over year, right? But income from operations and all this net income really boomed, right? So you can see income from operations at 5 billion. So basically it's quite on track that we have, let's say, 5 times 4 quarters, right? And then we times it by the market cap and we divide it by basically 20 and we get 12.5, right? So this is like the forward earnings on Alibaba stock, right? So I don't think it's 12.5. I think it's closer to 9 to 10, right? Because I think the few quarters that are coming will also show more improvement, right? Because China is reopening, all the lockdowns are no more, and also the regulatory scrutiny is not as high on Alibaba and all these tech companies anymore, right? So we can see that net income to ordinary shareholders was 6.78 billion. So it depends which numbers you use, right? So if you use income from operations, obviously it's lower. If you use net income attributable to shareholders, basically you can get a higher number, right? Basically you can say that, or maybe Alibaba is only trading at a 9 times forward income to shareholders or whatever, right? So if you take a look at the ADS, it's about the same. And later you can actually see that it's 280, because if you take the 0.35 times 8, basically because of the Hong Kong shares, right? This is for the Hong Kong shares, and it's actually 280, right? So a bit of confusion here that they put it like that, right? So net cash providing by operating activities. So some people also use this, right? Because this is cash that goes onto the balance sheet, right? Which is of course very good. We want to see that the company is actually getting the cash, right? If not, we see that there is more receivables and more receivables, and that may be a case of fraud, right? So China commerce doing very well. I'm not going to go through it all one by one, but I'll go through the very important points, right? So cloud was extremely disappointing. I don't think you can compare this to Amazon Web Services anymore, right? 3% year over year, right? Absolutely really terrible growth, right? If this cloud number was like 20% year over year, I guarantee you the stock would be up like 10-15% today, right? But obviously we see Alibaba Cloud is not as big as Amazon Web Services, right? Not as Alibaba shareholders, not as big as we hope that it would be, right? But overall, actually the earnings were quite good. I think it's not it's not like a blowout quarter, but at the same time, it's not like a terrible quarter, right? Another thing that I want to look at is actually the share repurchase program, right? And this share repurchase program is quite lackluster, right, to say the least, because actually they bought back 3.3 billion under their share purchase program as part of their ongoing commitment to shareholder return, right? And I thought that, you know, if the shares were at a low price, right, they should buy more, right? But instead, what they're doing is actually they're spreading it out on towards 2025, right? They're doing it like linearly, right? Regardless of what the share price is, they don't increase their purchasing when the share prices are low, and they don't decrease their purchasing when the share prices are high, right? And to me, that is a very bad form of capital allocation, right? So maybe that's a yellow flag to look out for. Let's see what else. Yeah, you can see here share repurchases during the third quarter. They bought back 3.3 billion, which the third quarter was really low share prices, right? They were like $50-$60 per share. Okay, maybe that's too dramatic, but 60 to 100 range, right? So they should have bought back more shares, right? And that was quite disappointing. So actually, if you take a look at why I'm saying they're just spreading it out and not making a good capital allocation, right? Basically, if you take 21.3 and you divide it by 8 quarters, right, which is towards March 2025, it's basically another 8 quarters only, right? It's 2.66 billion, and in this quarter they purchased 3.3 billion. So I don't think that is a significant enough repurchase considering the prices were at rock bottom, right? So that's just my opinion on this. So let's take a look at more. What else? I'm not going to go through all this because obviously you can see the numbers are basically here and you can go through it yourself, right? I'm not going to read through one by one, right? But basically the whole group is basically held up by China Commerce and International Commerce, right? These China Cloud are not really making Alibaba that much money right now. So if you're enjoying the video so far, do help me smash up the like button, hit subscribe, and also hit the bell button and press on all, right? So this will really help out the channel, and also watch till the end, right? Because obviously you don't want to miss any important information. So in general, it's actually a pretty good earnings. I wouldn't say it's a terrible earnings. I wouldn't say it's a great earnings, but it's somewhere in the middle, right? Especially that a lot of their instant delivery, like those, you know, the food delivery and also the fresh marts and all that are picking up steam a bit, right? Basically not as much operating losses as they had last year, right? So I haven't had the chance to listen to management's earnings call, so I'll do that later. But basically, I just wanted to get this video out fresh when my thoughts were just on this basically quarterly results, right? Because when you listen to the earnings call, maybe management commentary might change your tone more bullish because, oh, they want to sell you the world or something, right? That has not been the case in my opinion with Alibaba, but you never know, right? And another thing that I want to talk about is also the fact that the growth didn't re-accelerate, but they are saying that growth will re-accelerate these few coming months, right? Because of the whole lockdown situation. When they stop the lockdowns, there will be a lot of supply chain issues and there will be a lot of people getting infections. So if a lot of people have infections, basically, you know, it's still very hard to do business, right? So we maybe have to wait a few more months for it to normalize, right? And if we can get back to growth, right, which is one of my core tenets for investing in Alibaba, right? I feel like this is a company where the growth went up, and then it went down a bit, and people just sold off the stock, right? So I believe we're buying somewhere when the growth is at a trough, and when it starts growing again, the multiples will start expanding again, right? So I think maybe a 15 times earnings multiple will be quite reasonable for a company like Alibaba, especially a huge moat company. I would say 15 times free cash flow. So yeah, that's what I think, right? So I've actually updated my Excel, and you know, Munesh Parabhai always says that, you know, if you have to pull out Excel, it's too hard for you, right? So basically why I pull out the Excel is because I actually want to show you guys some of my thinking that goes behind my investment, and also I cannot just write it out of my mind, right? Because you guys cannot see it, and it's much easier to explain the numbers if it's on the screen, right? So I use a 20% discount rate as always, and the cash flow I use 20 billion, right? And then you can see the book value is $43.5 per share, right? And some people might say, oh, how did you get to this book value, right? Because if you look at the Alibaba earnings, actually the book value is higher, right? But I took out a goodwill from this because I don't believe goodwill has any value, right? So after running through the calculations, right, you can get $134 even if you use a 20% discount rate, right? So let's say you change it and you want to use only a 10% discount rate, right? Which I believe some people use a 10% discount rate, right? That puts the shares at $259 per share, right? But the reason I use a 20% discount rate, right, is because when you're looking to buy, right, the other 10% is also my margin of safety, right? Basically, my smart insurance, right? Let's call it. Because if I'm wrong and I use a 10% discount rate, basically I'm going to lose money, right? But if I'm right about the 10% discount rate, plus I have a 10% margin of safety, that means I'll be in very, very good hands, right? And I'll be looking at this $134 and it's still low, right? So I would use maybe a 10% when I'm selling, but when I'm buying, I definitely use 20%, right? So if it's 10% when I'm selling, then the upside is still about triple from here, right? But I think that's a bit enthusiastic, right? But if you look at the growth rates that I put for Alibaba, it's not actually very high, right? So 6% for the next 5 years, 3% for the next 5 to 10 years, right? So this is just maybe keeping up with inflation with the 3%, and the 6% is basically, I think China's GDP can grow maybe 5 to 6% in the next 5 years, right? So the growth rate, 10%, this is if the company performs well, share buybacks really kick in, and 7.5% for the next 5 to 10 years. I don't think that's too enthusiastic, right? And in the worst case scenario, I'm pricing it zero growth, right? Which I think this is highly, highly, highly unlikely, right? Because just by the nature of inflation, company earnings will grow, right? Oh, and another thing that I really wanted to show you guys is this, right? As of 31st December 2022, cash and cash equivalents, short-term investment, and other treasury investments in the equity, securities, and other investments on the consolidated balance sheet, right? This is basically just cash and also US treasuries, right? If they say cash and cash equivalents, right? It's actually 78.17 million, which is 78 billion, right? So about 80 billion of Alibaba's market cap is in cash right now, right? So I think if you look at the market cap, it's around 250 billion today. So that's about what, 20 something percent of their market cap just in cash, right? So I think it's almost 30%. Yeah, it's 28% of their market cap in cash, right? So I think if you look at it from that way, then the investment still looks quite attractive, right? And that is one of the margin of safety that is really built in, right? You know that if everything goes to hell, right, basically you still have this 33% intrinsic value that no one can take away from you, right? But obviously, if things are going badly, management might spend the money imprudently or whatever, but we're not going to get into that, right? What I'm saying is, at least you know that it's 80 billion worth of cash on its balance sheet, right? So yeah, this is about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead, and peace out.